Well, hello, happy July 30th, Friday evening as the stock market's closed out the week. We'll be doing our weekend update, actually a day early here due to my schedule. So the only thing we're going to miss is anything in the Middle East, but we'll talk about that in a second. Let's look at, well, first of all, when I get started, thank you for following. Thank you for religiously watching these. If you find this information useful, please like, subscribe, follow, share it with somebody who might benefit from it as well. But remember, as a certified research analyst, this is my views on the movement of these instruments. You need to do your own due diligence. Trading and trade planning has its own risk, and these are the things that I'm looking at and how I would trade plan for educational and entertainment purposes only, as I hope that you get some education out of it. If you ever want to learn in depth, you can reach out to me in any of one of my platforms, and I can set you up with one of my courses where I actually teach this fully to my students. All right, let's get into uh, Catalyst this past week. Going into this, guys, this is going to be a shorter video because as you'll hear in lead up, I think we have more downside. So I've removed a lot of the instruments that we've been following and just set alerts. Right? There's no sense just showing you a chart and saying, nope, just gotta wait. Nope, just gotta wait. Nope, just gotta wait. Because right now we're in a holding pattern, setting some alerts for deeper buys, and you'll see that in the updates. And the catalyst that affected us this past week, we had Microsoft, Amazon, Meta, Apple all had earnings reports, which is kind of some of the big stocks, and actually they did well on their earnings and shot up. I don't trust it. We can look at them briefly, but I think we still have more downside. Again, those are my thoughts. Uh, we haven't hit certain key levels that I believe we need to hit before we can start considering a near-term bottom. The Federal Reserve meeting rate decision this past week on Wednesday at 2 p.m. Eastern Standard Time, the Fed held its federal funds rate steady at 3.5 to 3.75%, but in a 9-3 vote. That means three members preferred a rate hike. Now, our previous rate decision on a hold was unanimous. So now we're starting to get dissension among the ranks where people want, Fed presidents want a Fed hike to curb inflation. But Kevin Warsh emphasized the 2% inflation goal and noted market yields were already tightening conditions. And this fueled rising longer term Treasury yields and market debate over policy path. Now, we saw on Wednesday, for if you were watching the markets, a sell-off, a really sharp sell-off after he was done talking. I joke with my traders as we watched it happen that the trend starts after the Fed chair talks, and then we trade then, and we personally hit four solid trades. But and then Thursday, after we had the PCE data come out, GDP grew at 1.5% annualized rate, and core PCE rose modestly about tenth of a percent monthly. Year over year, personal spending income data was also released, but it was a positive reaction off of that. So we had what could be deemed as hawkishness from Fed Chair Warsh, and then some positive reaction off of the PCE data. And then Friday, we saw kind of a hold and a bit of a sell-off. And that run-up is what I'm suspect of. And we'll see it. I'll show you in the charts when we get to them in a second. But everybody's saying, oh, now it's time to buy. It's not time to buy. I don't think so. Hence is why I've pulled some off the report here, guys. I've lived this before. I think there's further down. But potential catalysts for this coming week, we have the July employment report. That's the non-farm payroll. That's probably the biggest catalyst on Friday that comes out. We have some other earnings from major companies. ISM PMI comes out on Monday. ISM Services, I think, is also midweek. And then Jolt's job openings, I think, is on Thursday, initial jobless claims. Now, you notice that I didn't mentioned mention the war with Iran because as of right now, the time of this filming, um, we have Trump saying that the U.S. is possibly going to attack Iran's energy infrastructure all weekend, and they will continue to pay until they come to the table. So the latest news drop that we got on Financial Juice is Caroline Levitt, the press secretary, saying that that's what Trump, reiterating what Trump has said, that this weekend is going to be bombing energy infrastructure. Guys, increased war will not be good for the stock market, right? So let's see what the charts say. That's why I think we have further down because I don't think this conflict's going to be over as fast as what everybody's saying. I don't know. I'm not an expert in that, but just don't like it, folks. All right, getting into the indices, the Nasdaq, guys. So right here, the Nas, as we, again, predicted the top. We were very accurate on that. Beginning in May, said that we're going to top around 30,000 to 31,000. We failed the all-time high anchor view up and then dropped. I called this touch of this is the anchor view up from the run. And I said, once that fails, we will retest it. You don't believe me? Go back and watch the previous videos. Let's see what happened here. Did it fail and now retest and then fail again? Yes. That is why I think we're going to head down to that 26,000 zone. In order to be incorrect here, we will have to get a close above this red box because if you remember from our previous report, it was green. So green support, red is resistance. Once we flip that, it's now resistance. If we get a close above that, I think the upper limits, as long as the war is still on, is going to be that all-time high anchored VWAP. Uh, Unfortunately, we've been living in this since the end of February. It depends on what comes out on the news on the weekend with the war. But if it's negative, we're heading down to 26,000, folks. Commiserate with that. Remember, I bought and called two buys on lots and S triple Q. My dollar cost average now is right here, and you can see well into the money before it pulled back slightly. I'm predicting this gray box for a price target, which is the approximate price when the NAS was at 26,000. So this is a hedge. In other words, buying S triple Q to which is shorting the Qs, right? Shorting tech, and I'm targeting that zone right there for, and then I'll pull that off the table when I see what the technicals look at that time. SPX, a little different story. Uh, on its close, it closed above the all-time high anchored VWAP. But guys, listen, from last week, I said that if we fail this all-time high anchored VWAP, that we're going to test this green line, the anchored VWAP from the run. Look where it was. Look, I said 7,300. You guys remember me saying that? How close was it? It hit 73.14. We were within 14 points of that zone. So that's pretty accurate, guys. Now it's a discussion. Do we hit all-time highs before we break this zone? I think the probability is that we break this zone and head down. Again, NAS 26,000, SPX 7,000, and then the Russell 2000 keeps failing this all-time high anchored VWAP, which just drops. I am surprised we haven't touched this runs anchored VWAP at 2855 yet, but we will. And then once that test fails, I believe we see 2,700. So that's the Russell 2000 and the rest of the indices. I know price lifted slightly, but volume tells the story. Look at the volume in the NAS and how many sellers are there. And this bounce back was muted by the next selling day, right? So this is why I pulled a lot off the report that we're not going to buy yet. We're not going to get super excited and buy. Now, the thing to buy is oil, because if you think that this continues to get worse in the Middle East, you can buy oil, right? Um, Anyway, so buying the all-time high anchored VWAP right here. I called this in my groups. I called it here. You got 2-day close above this, hopefully. And actually, a lot of us bought um, anywhere from 82 to 84 and are in this right now. Target's 100, right? If we get an open inter, I think as long as the war is raging, 84 and a half in there, 84. Anything above 80 is probably going to be the buy. But using the all-time high anchored VWAP, um, this red line at 84.64 is kind of like the line in the sand, and it's a zone. So right now, oil's a buy, folks. It is a buy. Google, you can see how we put out this trade plan in this support box right here. Look, it tapped exactly the trade plan and then has run back into this box. This box is the gap. Gaps provide support and resistance. Very strong for Google after its earnings, just like Microsoft and Amazon. I know this run looks attractive, and I know a few people bought the discount. Or I remember, if you go back and watch my videos, I said between 300 and 315, it tapped 315.22. So did you get filled, or did you not get filled? That's fine, because I think we'll get another shot at it, folks. I know it looks like the boat has left the dock here on Google, and like Microsoft, this huge gap up. But if you believe that the indices are going to drop, these stocks are in those indices and should deal with some pressures. Right now, looking at Microsoft by itself. So let's look at Microsoft. It is a 2-day close filter above the all-time high anchored VWAP, right? This was the identified support zone that I gave everybody here on this report for several weeks. It hit that zone, and now look how high it's shot up. I was looking for a greater discount when the indices sold down and then the earnings report said otherwise. So this is a new buy signal. If you're daring and you want to buy with the war conditions going on, you can buy near this all-time high anchored VWAP and then try to run it to the all-time high. So there's the all-time high anchored VWAP, currently 437. If you can get a discount near that and it holds, put a stop loss or something set around 430, 429 and see if you can chase it up. Again, because this is a 2-day close filter of the all-time high anchored VWAP, as it stands there, that is a buy signal, but I am suspicious based on things going on in the Middle East. I would rather, again, sit on cash and wait to deploy it later. IonQ, the reason why I kept it on the report is it has bounced off that IPO anchor VWAP. Remember, it's given us three to four beautiful trade plans as you've followed me for months. And this is another buy signal off of that for IonQ. But what I would do here is if you've bought, I would tighten your stop loss below that pivot swing to reduce risk. And your upper limit of this trade, if it runs at all, will be about $15. You're going to get up to about $48, $49. Just because I think a couple things. I think that market pressures are there, and I think AI and quantum bubble pressures are there. So keep an eye on IonQ. If you're in it, let me know in the chat. Let me know down there in comments. Are you in it? On anything. If you need help, guys, just comment. I'll help you out. Bloom Energy. So this is a expansive money chart. In other words, where it sets higher highs and higher lows, and then giving a really big discount. Um, Added it to report, I think, a week ago. Identify this gap. We pierced that gap, broke. So we've closed this gap. So this gap no longer exists in terms of support and resistance because it's closed on both sides. But I talked about buying this run's VWAP right down here. And that happens to correlate with a golden ratio give back at 382. And then it ran. So we missed that VWAP by about $10, $11. And then ran right to the all-time high anchored VWAP. You see that? Like right where it stopped. So I'm going to hold steady, guys. I'm going to say we're going to wait to try to buy a test near that anchored VWAP and still run it there. I think we see that again if everything sells off. Um, would as long as this anchored VWAP holds, we won't really break trend. We'll have to get down to 115 to break market structure down there, but keep an eye on this one. We'll set you can set an alert. If you didn't know, you can set an alert. Right click on the anchor VWAP and then add an alert. That way it'll tell me. I think that's the buy zone, folks. That's the buy zone that I'm interested in. Iron. The reason I'm bringing iron into the report is these critical VWAPs. We had a nasty piercing through and then held. So this trade plan, did you guys get into this around 32? Depending on where your stop loss is, you might have got in and got out, or if you're waiting for confirmation at that level, you now have it. It's holding. So iron, there's the all-time high anchored VWAP. So if you get in near 34, 35, you might be able to run that to 48. Optimistically, you might be able to get it up even higher. I think in these market conditions, it might be a little limited, but that's a pretty good trade plan with a defined stop loss, either below this pivot at 28 or even tighter at that anchored VWAP at 31. That is iron, IREN. Let's look at metals. Gold. Gold is doing exactly what I said it would do, isn't it? So we're getting this bouncing ball effect, hitting 4,000 big bounce, 4,000 medium bounce, 4,000 smaller bounce, 4,000 smaller bounce, and this is going to happen. So what I'm predicting, guys. Now I'm at war with a few fundamentalists that think that 4,000 is the line in the sand. I'm not too sure. Although in my groups, I have called many multiple buys off of 4,000 for 25, 50, 100, and 200 points, right? I said right here on this video that you can buy this for a short amount of points, but be willing to take your profit and re-enter and get out. So I think it's bouncing ball effect. That's just a term to identify what is known as a descending triangle. Right there, that is the technical CMT term. We have a 68% chance of it breaking down right here, guys. So you have level support with declining resistance, meaning it's putting more pressure on that stock. So, and we're in the death cross of gold. So I think it's more likely that we see 3,500 than we see 5,000. I'll take that bet. Anybody want to bet me? Come on, down in the comments, bet me on it. 3,500 before 5,000. Going once, going twice. Let's bet. All right, let me know in the comments, folks. What do you think? Um, all right, silver, same story. That buy zone 54 to 56, and it's holding, but we're getting that bouncing effect, right? Tap, and then it's getting more muted response. Once that breaks, I think the downside is 40, 45 to 49 before it recovers, probably up near 71 to 72, where that all-time high anchored VWAP will be in. So I am buying more physical silver this weekend at this price, right? And then if it drops to 45, I'll buy it there too, right? If you follow me long enough, I buy physical silver every opportunity that I get. So right now, I'm not day trading or short-term trading silver like I am gold, but that's kind of your zone you want to watch. Once that breaks, you get down to 45, I think that's going to be some great buys for you. Platinum, same thing. Really, the key level we're watching in platinum's 1,500. If that breaks, I think we see 1,200 and even 1,000, where it'll be very attractive. But we're getting very strong support in this box that I created weeks and weeks ago for you. But it's the same thing. It's kind of like the last line in the sand before it falls 200 to 500 points. And copper is your biggest metal winner. Guys, I can't tell how many times we've called when to buy on this. This is the all-time high anchored VWAP. I was holding. I said buy it 575. So buy it 595. Buy it 6 to 605. Last week I said buy it between 615 and 625, where you could have got in again, and now it's up to 645. Not buying copper. You're wrong. If you want a number to buy in, use the all-time high anchored VWAP set to Wednesday, May 13th's candle, and it's currently at 627. The thesis says this is going to $10 with all the AI data centers that are being built because the demand on copper is huge. So that's copper. Let me know if you buy it. KHC, congratulations. I've called this dividend payer for everybody, and we just got our golden cross, guys. So that is the institutional buy that should push us into my price target between 36 and 38. We called that buy in this green zone 23, 22, 23, 24. And we were up as much as $4 to $6 in appreciation. It is trending up since it's coming out of this zone. You can see that here, as I think we're going to head upward. But even if it goes slow, we don't care because we're realizing a 40 cent per share dividend. That's KHC. Kraft Heinz, guys. Did you buy any? Let me know in the comments. Finally, DRAM. I just want to put this on everybody's radar because chips AI, well, matter of fact, this is a managed ETF that holds treasury bills, SK Hynix, Samsung, Micron. Everybody asks about Micron, SanDisk, Western Digital, Seagate, and then a number of others in there. So this is managed, and you can see it's at a big discount. We had the buy zone 40, we had it around 48 to 50. It did drop as low as 44. Did you get in? Let me know in the comments. I like the discount here. If you like the chips in that sector, this is relatively new, was opened in April. This is just one that you try to buy and hold because it is a managed fund on any discount level. Don't go full goose bonzo right here and put everything in it, right? So just nibble at it. Right now it closed at $50. You might be able to get it down as low as 40. But man, wouldn't that be a steal with the all-time high being at 80 and it's a managed fund? They'll move it around. So that's DRAM. Keep an eye on that one. Matter of fact, as I sit here, I want to set an alert in case for some reason we see near $40. But this is kind of the buy zone that we have, like 45 to 50 is a little wider zone where you can start tiptoeing in and getting yourself some of those chip stocks rather than buying the individual instruments. Guys, again, the report was a little shorter. I did cut some off. If there's ones that you wanted to see that I didn't talk about, you can always reach out in my groups, comment below. I have set alerts. I will bring them back and I will do more research. I want to see how this shakes out. If the war rages on, we'll come up with wartime stocks. We'll start to develop other trades. But right now, I think there's so much uncertainty with more downside. It's a wait and see pattern. But as always, if I get enough of you guys commenting, hey, can you look at this sector? Can you do that? We'll add it to the report, guys. Have a good rest of your weekend. Thanks for following. Share this with somebody that can benefit from it. And I appreciate you guys as always.